On October 10, the central bank announced measures to enhance the stability of the capital market as per the guidelines from the 20th Party Congress, aiming for healthy development. The People's Bank of China decided to facilitate swaps for eligible securities, fund, and insurance companies to use bonds, private equity, and A-shares as collateral for acquiring high-quality liquid assets. The initial operation scale is set at 500 billion yuan. The operation scale can be further increased, with applications from eligible companies accepted starting today. This can be seen as the central bank granting financial institutions greater leverage by selectively releasing liquidity, allowing them to exchange equity assets for bond-like assets. On one hand, it encourages financial institutions to sell for cash to reinvest, and on the other, it strengthens the buying and selling power of government bonds, keeping real interest rates stable and guiding two-way fluctuations in the bond market. The influx of institutional funds from this policy is expected to continue for a long time. From the perspective of institutional trading styles, value and growth stocks will remain key focuses for market investment. However, we also need to be cautious of consecutive days of rising and falling markets, which may trigger profit-taking or stop-loss exits. In the short term, the fluctuating market conditions will lead to increasingly intense rotations and divergences among sectors. Be cautious about tech stocks and micro-trading that lack fundamental support and institutional involvement. It's on a downward trend. From the perspective of following policy trends for long-term gains, the era of blind buying is over. We advise investors to engage in the overall market through strategies like index enhancement and flexible long positions. Short-term volatility can also benefit the returns of equity index CTA strategies. Investors should be reminded that timing the equity and derivatives markets is quite challenging. Stock derivatives can vary widely, and asset movements are complex, making ongoing tracking and professional analysis difficult for individual investors. Making effective and professional investment decisions requires long-term experience and expertise. For investors, using the professional services of a buy-side family office is an ideal choice. By participating in the market through customized investment directions, you can receive more professional guidance and asset management coverage than direct trading.